Okay. I'm letting
We want to
everyone
start?
know that you're being recorded. Yeah, I say let's get started.
Okay.
So go ahead. Taylor and Jake are the ones that are going to run this webinar. So I will let them handle it from here.
Yeah.
If there are any questions or anything, guys, feel free to just kind of jump in. We're a small group, or you can use the chat function if you want.
Yeah. So just a quick background. Jake and I worked together at our prior accounting firm, and Jake is a traditional CPA. I have experience in what's called the R&D tax credit, which is why everyone is here. The idea is that we want to help people claim credits based on the improvements, whether they're new or changes made to their company's existing products or processes. So what we do is go into companies primarily manufacturing, construction based, and we meet with them and we say, what are the activities that you guys have going on? For our purposes, that's going to be construction, remodeling. We then say, okay, based on these activities, based on the employees that you have performing these activities, there's probably some costs that we can capture into this credit and save you money on your taxes on an annual basis. Pretty straightforward. Background on the credit, it was started back in the 80s, and it was for the more traditional, what we think of as R&D with the aerospace industry, technology. And over the last 20, 25 years, it's opened up to broader manufacturing and construction. And at this point, the last 5 years, it's been for almost any company that can make a claim to the process improvement or product improvement nature of the credit. So, Jake, do you want to add anything?
Yeah, no, I mean, I think that's the biggest thing that we'll touch on is that a lot of people hear R&D and it kind of scares them away. So we want to make sure that just a lack of kind of understanding and knowledge of what the credit actually is and kind of how it works.
Cool. All right. So just a quick agenda because we have to do that. I'll talk about what is the R&D credit, some common misconceptions, who qualifies, give some examples of the types of activities that qualify, go over our process, why you should choose us to try to claim this credit, and then we'll take questions. All right, so what is the credit? I already touched on it a bit, but it's a tax incentive available at the federal level as well as the state level in Illinois for any new or improvements that you make to your products, processes, software, techniques, or formulas. For our purposes, that's going to be the design, whether that's the physical, or sorry, the like schematic design. So if you're an electrician or an architect and you're just doing the schematics, or if you're actually the GC or the remodeler on the job, so you're providing the actual, hey, I had to remodel this kitchen. The product is the kitchen. So just again, quick background, it's the most lucrative credit that businesses can claim, but for whatever reason, and Jake and I always talk about this, it's crazy how few people actually know about this credit. But it's estimated that about only a third of the businesses that are eligible actually take advantage. And then the rule of thumb, because everyone asks this, there's about a 10% ROI on your qualified expenses. So if you have $500,000 of qualified expense, by qualified expenses, we mean wages, subcontractor expenses, and potentially supply expenses. $500,000 will result in it'll flush out to about a $50,000 credit. So common misconceptions. We don't do R&D. So again, the credit was initially created for what we think of as traditional R&D, but the IRS definition is much broader, and it includes traditional manufacturing, construction, and it really, at this point, it should be called a process improvement or a manufacturing credit, because it's not, it's the R&D is probably why, the name R&D is probably why only a third of the companies actually claim it that could. And then the second most common thing we hear is, I don't want any additional red flags. I don't want to, I don't want to get audited. So the R&D credit does not increase your risk of being audited. To our knowledge, as accountants, the only thing that we're aware of that increased your risk of audit is amending a return and taking certain, I forget what the compensation is. I think it's over $5 million a year in compensation. Higher net worth individuals or higher earning individuals tend to have a higher likelihood of audit. So that being said, even amending a return is still only about a 3% chance of audit, whereas a timely filed is less than 1. So depending on how you look at it, right? It's like you could say it's 3 times as likely, but also it's only a 3% chance. So I always tell clients that I don't have any reservations about taking the credit and amending. The only reason I wouldn't amend to take the credit is if there's something else in your return that you don't want getting looked at, right? We have a pretty buttoned up process for the credit, and we have a very thorough way of vetting and making sure that we can defend that under audit. It's if there's something else that 2 years ago you shouldn't have included this, that you might be wary of. Okay, so who qualifies and what expenses can we include? So again, the credit's open to all industries. There's no restrictions, technically speaking. The most common are going to be your traditional manufacturing and construction. And then the expenses we can include are wages, supply expenses, and what they call contractor expenses. So for us, it would be anything that you're subbing out on your behalf. So if you're a GC and you're subbing out the electrical work, the HVAC install, anything you're doing that is what we deem qualified. So for example, if you're subbing out the framing of, you're building a new home, the framing is usually something that I either take a smaller percentage of or leave out entirely, just because framing has a less, I would say, has less technical uncertainty than something like plumbing or electrical, right? There's, framing is framing if you're doing a home. Maybe if you're doing something that's a one-off or is out of the ordinary, right? Something that's not just a normal, you're not just framing a typical home. But we can include the subcontractors, and then the supply expenses is a little unique. So technically speaking, we can include a percentage of the costs that go into the remodel that are what we would deem to be a one-off. So if you were using materials that are a little more challenging, and what I mean by challenging is if you have a request from a customer who needs they have a really big island counter, or they need something to match, and you have to use an out of the box approach to either get it to work, whether it's getting it in, maybe it's getting it in the home, maybe it's getting it installed. If you had to use, again, think about it from a standpoint of, am I doing something that is out of the box approach that's not something I do all the time, right? So you're not just carrying the countertop in, they got a Home Depot truck and throwing it on there. But yeah, the primary drivers of the credit are going to be your wages and the work that you sub out. Okay, example activities. So this is where we get to the meat and potatoes. Structural redesign in older homes, retrofitting, that's a big one. So somebody says, I bought this, 65-year-old home, and I want you to put recessed lighting because right now everything's just being lit up by lamps on a light switch. If you are doing anything that requires a redesign of the home, that's not just we went in and paint on the walls and put new flooring in, there's probably a good case that there's R&D taking place. Custom foundation work, custom features. So if somebody says, hey, I want a different staircase, I want this staircase moved, I want to open up this room, right? I've got an older home that's very segmented. I want to open up this room, and you've got load-bearing walls. You have to move the electrical. Those are the types of activities that we hone in on. And then energy efficient building upgrades, smart home integration. The last one that's actually probably overlooked the most, but is pretty significant, especially if you're doing work depending on the municipality, is code compliance. So, I am the customer, and I want you to build XYZ. Here's the requirements, and then you have to do it in Cook County, which requires you to meet a higher threshold or a different sort of, it's not just as easy as, okay, well, this is what the client wants, so I'll just do that, right? There's certain things that you have to meet, whether it's regulatory from Cook County, whether it's, fire, safety, whatever it is. If you're having to figure out how to get something done within the confines of code compliance, that's also qualified. And so, for just as an easy example, Cook County is known for having a really high level of code requirements. So a lot of the work that people do in cities, whether it's, hey, you have to use this sort of You know, you have to use this sort of piping for the plumbing, or you can't use this, or you have to use that. Those are the types of things that we would consider qualified. Okay, so our process, how this works, we meet with you, we have an introductory meeting or phone call. You basically tell us about your business. We want to learn about what's going on, right? Who are you employing? Who are you subbing out? What are the types of projects you're involved in? And then that's where we basically say, hey, I think there's something worth looking at. We're not exactly sure what the value is, but it's probably worth your time. And then we'll send you an information request, which is basically, hey, we need to look at your wage information, employee roster. We might request invoices depending upon the scope and what we're including, or general ledger information. And then once we gather all of that, we'll do our credit calculation, and we'll say, okay, based on what we discussed, based on the expenses they provided, we've done our vetting. Here's what we're looking at in terms of credit, right? We're looking at a $50,000 credit, a $300,000 credit, whatever it is. And then we present that to you and say, here's your credit, here are our fees, you know, here's the benefits. You'll know exactly what you're getting back and what our fees are before we actually engage or charge you anything. And then on the back end, we provide a full report that basically documents, hey, we met with XYZ company, right? We met with you. Here was the process we followed, and here's the justification for claiming the credit. And the whole reason we do this is, as I mentioned earlier, if we do get audited, this is really good documentation to have, and it goes a long way with the IRS because it shows a lot of people, you can just claim this credit. Nothing says that you have to use a firm like ours. If you want to, you can just throw whatever number you want down on the tax return, and unless you get audited, you'll be fine. So nothing says that you have to have a third party provider, but this is probably our biggest value add from the standpoint that you're going to maximize your credit, but also you're going to be compliant with the IRS. And if you're audited, we know how to push back, and we know what they're looking for. So the last bullet there about audit support, I sometimes I'm hesitant to include this, but I usually get the question at the end anyway is, okay, so we go through this process, we pay our fees, we claim the credit. A year from now, 2 years from now, we get audited. What happens? So we include audit defense in our fees, but also what happens? Well, if we get audited, what's probably going to happen is they're going to pick at something relatively small and try to get you to pay a little something and then call it even. So usually that's, if you have $100,000 credit, they're probably going to ask for, you know, give us 7,000 and we'll call it even. That's usually how it goes. I think our average, I say our average, since I've been doing this, it's usually about 95% of the credit is retained. It's never a zero sum, you know, it's either allowed or disallowed. That's not how it is. It's a matter of, you get audited, they say, hey, you claim the R&D credit. Did you claim it internally, or did you have a third party provider? And then they'll reach out to us, and then they'll say, hey, show me the documentation that you provided. And then we usually go from there. Sometimes it's as simple as just checking the boxes. Sometimes they want to look through a little more in depth, but generally speaking, you're retaining the vast majority of the credit. So people always ask, you know, well, if I get audited, do I have to pay it back? Or, you know, am I going to jail? Is this something that I can get in trouble for? The answer is no. You know, I've actually never seen firsthand where someone has to pay the credit back. That's something that's in, you know, case law documents where someone's claiming the credit and they shouldn't be, right? They're a restaurant, or they're fibbing on the wages they include. So I throw that in there to say, if your fear of taking this credit is because you're going to get audited, that should not be the case. You shouldn't be worried about that if you use a third party provider, at least. Okay, so why choose us? So there are a good number of firms that do this, and I think these are really the three things that set us apart. So we work almost exclusively with manufacturing and construction. And the businesses we work with, we don't work with, I don't think we have any clients. Jake, correct me if I'm wrong. I think our biggest client is 50 million, right?
Yeah,
So
correct.
the vast majority of our clients are much smaller. And so we understand the business dynamics of smaller businesses. And we have some clients who have a lot of risk tolerance and some that don't have a lot of risk tolerance. And I think that's really what sets us apart, because we get to know our clients and where they want to fall on the risk spectrum so that they can make the credit advantageous to them and still be able to sleep at night and feel confident in what their credit is. Audit experience, I already touched on that, but we've gone through audits. We know what the process looks like, and we know how to preemptively respond because we know what they're looking for. Our fees are 20% of the total credits. Most firms are going to be in the 25 to 30% range. And if anyone who sees this video firsthand or through NARI will get a 15% discount. And that's not like a time stamped. You have to do it this month or this year. The only thing I would add to this before we go to questions is people always ask, well, when's a good time to claim it? Because this gets filed alongside your tax return, it would just need to be done before you file. So if you're wanting to file by March 15th, then it is time sensitive. But I always tell this to clients, don't be afraid for your accountant to extend, because there's nothing wrong with extending. We can extend and then file 2 days later or 2 weeks later, 2 months later. And now that I say that, I did forget something, Jake. So we don't take the place of your CPA. That's really important here, because anyone who sees this is going to get excited. They're gonna message their CPA and say, hey, John, I found out about this really great credit. And the CPA 90% of the time is going to get defensive because they think, well, I don't want them talking to this firm because I don't want to lose the business. We are not interested in doing your tax or your accounting work. We actually don't even, that's not even something we do in-house. So that's very important that when you tell your CPA that you want to take this credit or what do you think about me taking this credit, you let them know that we don't even do tax work, because that's probably what, Jake, 80% of the pushback from CPAs.
Yeah, a lot of it is we work in complement with your CPA, especially because obviously I've been a CPA myself for 10 plus years. Like I actually like coordinating. That way we can do like the tax planning together. So that way we know with the CPA and the client specifically, hey, if we have a $30,000 R&D credit, like we'll use that to adjust the estimates. But again, we're always want to be above board and collaborate with the CPA. We're not trying to poach anybody's business. We're just trying to provide a much overlooked service.
Yep. Yeah, I forgot to add that in there. So, but yeah, so that's, I know it's a short presentation. I try to keep it relatively to the point. Here's what we do. Here's how you can qualify. And if it's something that interests you, you can reach out to us and we can figure out pretty quickly whether or not it's worth looking into. Because, at the end of the day, if we meet with you and you don't qualify, or maybe it's not worth going after from a dollar perspective, then at least it doesn't cost you anything. It's just your time. And so that's basically our sales pitch is, hey, we're here if you want to use it. If not, that's fine too. And here's our process. So I think we only have like one person. So if anyone has questions, or Maureen, if you have questions.
So
I do not, but who? Yeah, David, please do.
Define credit. Another
So
way.
David,
tax
we're already
credit
done with your R&D study, David.
Pardon me?
I said we're already done with your R&D study. No, so the credit is that, yeah, go ahead, Jake. It's
a dollar for dollar credit. So if you owe $20,000 when your CPA finishes your tax return, the credit wipes out the whole thing. It's not a deduction. It's not like buying a car and then you buy a car for 20 grand and that way you get a deduction. A credit is actually a dollar for dollar match.
Yeah, I just wanted to, and obviously you've already sent us material.
To emphasize the strength of this. Yes, it's not, people think, even a $50,000 deduction is like, oh my gosh, but no, this is a dollar for dollar credit. So yeah, that's why it's extremely powerful.
Okay, I just wanted to confirm that.
Yes.
Yeah. Thank you for asking that, David, because I actually
didn't
even think about that.
Another point is, let's say that you only owe $15,000, but your R&D credit is $20,000. You don't get a refund check for the $5,000, but it does carry forward. So you don't like lose it if your R&D credit's too big. So even if, hey, you may be making just a little bit of money and your R&D credit's large, it's still worth to pursue it because we can carry it forward to offset future years of taxes.
Okay.
Okay, I have a question. You stated that your fees are 20%, and then you said most times 25 to 30%. So which is it?
No,
most
other,
external companies outside of us, if you go and went to one of the national R&D brands, it's 25 to 30%. Our fees are 20%. Always.
Okay.
Unless you're a NARI, then we knock off a little bit for your bill.
so yeah, so if you're NARI, the 15% means 15% of the 20%, right?
Yes, no, yeah. It's not 5%. Yeah.
I watch you accountant types, you know what I'm
I
saying?
know, no, we're not trying to pull. Yeah, if we bill you, if your bill is 20 grand, then we take 15% off of that. Yeah.
Okay.
Renata, what if that was a typo? Then you got me on camera looking like a clown.
Yeah, hold on to your invoice. We're gonna send you. Maybe you don't need to pay it.
So, okay, before I monopolize all this, does somebody else have a question? Maureen, did you?
I do not. This is very informative for me, though. I'd never even heard of this. So this has been a great education for me.
So, interestingly, we first found out about this on a NARI webinar when COVID hit and everything had to go to webinars. And I remember, and it was with your old firm, you guys, right?
Oh,
And
Trimerit.
And they had just joined NARI and they were, right? And actually that webinar, which introduced this concept, is what brought us to you guys in that firm. So my question, I think that was 2020, right, Renata? Or maybe a year or two before that. I don't remember exactly, but so we worked with you guys, and it was an interesting journey. But then, and correct me if I'm wrong, either the administration or the IRS changed their rules and totally messed it up.
Yeah,
Correct.
that's why we started the process with you, David. And like, I think the first time I met you was 2019.
Okay.
And we just finished the credits because it was like we were going to amend, we were going to claim it, and then we missed the window because we got into that weird 21. So for anyone who's watching this after the fact, the idea is that for tax years 22, 23, there was a 2-year hiatus where the R&D credit was not a claim. And that was due to the treatment of something called 174 expenses, which basically just meant if you claimed the credit, you were going to owe more in tax. That's just a straight away way to say it. The easiest simplified layman's terms is if you took this credit, the treatment of those expenses made you include more income, which means you paid more tax. So
right.
Now the benefit is now you can go back and amend. So like now those rules are, those rules have been, since, I don't know if repeal is the right word, but the treatment of those expenses it's back to what it was pre-2021 or 2020, whatever. So it's now the same as what it was, but for those years in real time, if you weren't already claiming the credit, it was not worth claiming. That's why we didn't do it. So, but now the credit's good through 2031.
It was extremely confusing.
Trust me, I know I had to have this conversation 600 times. And it usually did not go well.
Right, and 300 of it was with us.
Well, and at least with you guys, since you weren't claiming it, right? It didn't have a huge, the impact. Imagine if you're a manufacturing company that has millions of dollars of expenses, and even if you're making good money, if you have to pay an extra, some people I know had to borrow money at lines of credit in order to pay their tax bill, because they were getting taxed on income they weren't actually receiving. It was, anyway, I'm probably losing a lot of people at this point, but it's
okay. I didn't mean to.
Yeah, we're good to go now. That's all behind us. That's good to go. So yeah, we have at least a runway of until 2031, where the credit is renewed through. So.
Okay. I think we either have or we're about to schedule a meeting with you guys to go over your proposal and stuff. Is that right, Renata?
Sorry, I'm muted. Yeah.
Oh, sure.
We want to schedule a phone call and review what you've sent us.
Okay. Okay. So,
cool.
So we'll get in touch with you.
Perfect.
Okay, I don't think I had any other questions. You answered the biggest one, and that was the same one I had last time, was how are we actually getting away with a R&D credit, right? We're not scientists. We're remodelers, which is better than being a scientist, by the way. It's,
Much more useful. I don't live in a lab.
right?
Yeah, that's Dave, to your point. That's really the biggest. If this credit was not called an R&D credit, if it was literally called process improvement or manufacturing, construct something, it's called something that is so tied into, again, the scientists, the aerospace, the very high tech, NASA, Tesla, doing things that are bleeding edge technology. That's why. I mean, I can't tell how many times I have literally. It's getting better now, but when I first started doing this, I would walk into a manufacturing facility at my first accounting firm that was 150, $200 million a year manufacturing facility that has CNC equipment that is doing really innovative stuff. And the owners are like, no, we're not doing R&D. You can't tell me I'm doing R&D, and just wouldn't hear it. I'm sure they're claiming it now because, there's a lot more resources available. And I'm sure somebody has probably said, hey, you guys are missing out on a ton of money. But that's why. If they just changed it, that number would probably double of the people who claim it. So they don't do that, David, because from a political standpoint, no one really cares that much about manufacturing or construction, right? From a political standpoint, do you want to be this, J.B. Pritzker voted against the R&D credit. Do you want to hold back America? Right? That's the, it's the naming convention. That's why it is. There's a lot of lobbyists that keep it that way. So.
Okay.
Well, thank you, guys.
I wish you'd have gotten more participants.
No, don't worry at all. Like, again,
That's
like
okay.
we'll send them like kind of custom emails and kind of get in touch with them, and yeah, no worries. And we'll be around.
No,
Okay,
this is good because you can always send it. This doesn't surprise me at all. I would have been more surprised if everyone showed up on a Friday to a webinar that's, like I said, once you've done a few of these, it's usually if you go, it's 10% is a pretty good hit rate of people, because it's like, well, no one has to do this, and it's Friday.
And it's tax credits. I mean, even anything with tax, I'm surprised they even signed up in the first place.
I know.
So it's a Friday. It's taxes. It's like was doomed from the beginning.
Yeah,
it's
no worries. Again, it's just about getting letting, we can directly reach out and kind of give them like a custom PDF. And I think that will definitely open their eyes. So that way it's like, oh wait, we do framing, we do this, we do custom, plumbing, whatever you do. So I think it like kind of opens their eyes, because when you hear tax credit, you're just like, I don't want to talk. I already have a CPA. That's like our biggest pushback is, well, I already have a CPA, when your CPA is most likely not doing it.
Okay.
Now, before we wrap up, we do have a question. Bolanli, your hand is raised, so go ahead.
Yes. Just a quick question. So for like the projects or the process that could qualify, is there any kind of special way to do we need to take like extra notes? Like, how do we documentation for it? Like, is that a separate thing, or how?
Yeah, no, so I usually don't get into that at this point, but what we do is there's some industry standard ways of documenting it. Basically, what we want to do is we want to say, okay, who's involved and what kind of activities are they performing? So like if you've got someone who's a designer, right? What are they designing? Here's probably where they fall percentage of their time. And what we do is it's basically an Excel model that maps activities or projects to someone's time and their estimates. It's a pretty standard IRS approach, but basically you're going to say, okay, John, the superintendent, spent 20% of his time solving problems in the field, right? Sarah's a designer. She spends 35% of her time designing the bathroom remodel from the start, whatever, talking to customers, and then we map those activities out and we get a final percentage.
But yeah, no, there's not extra documentation that the company is required to do. Like, you don't have to change your course of business, which I think that's a common misconception. You don't have to have nobody has a documented timesheet where every second of every day is spent. So we kind of handle the documentation based on conversations with the owners.
Okay, got it. Thank you.
You bet. Yeah, good question.
So
Woohoo,
One
we got a
last-
real question.
one more thought. You'll get more NARI members if you join.
We're going
we're
to.
way
I
ahead
already
of
talked
you.
to.
Well,
Oh, try. Well, we're gonna sponsor the gala, whatever we can do. Yeah, don't worry.
Okay.
There we go. You heard it here
Yeah,
first, folks. Okay, we've
gonna
got
get-
this on recording.
I know.
Yeah,
I know.
get-
I know. We're kind of stuck. We're getting recorded. We're gonna end up having to do free
some-
R&Ds and shrimp and
The
lobster.
invoice is in the mail. Hmm.
have too many cocktails and bid on the autographed Michael Jordan ball, whatever.
This is
Yeah.
This is actually our 30th year with NARI.
Oh wow.
Wow.
Wait,
Oh,
this
that's
is your
awesome.
30th year with them?
Yep.
Oh my gosh. Jake, how are you 31?
32. Hey, I'm old.
Well, Jake looks 27. I know. Don't let my youthful appearance fool you. I am 30. I'll be 39. So I know what you're thinking. I'll look a day over 46, but anyway, so well, I appreciate everyone's time. Like I said, if someone sees this, feel free to reach out to our email addresses. We'll probably be in touch with most of the people that are in NARI. So look forward to anyone who wants to pursue the credit.
Thank you, everybody.
Perfect. Thanks,
Thank
guys.
you.
Have a great day.
Thanks
Okay.
all.
Great weekend.
Bye.